Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Very exciting stuff. We finally got that announcement, as expected, about the closure of the convertible bond offering, but some fun mixed in there by the company entitling the file that the offering indentured was filed under, and that is Project Rocket. So something here, right? This seems to be, in fact, right, some maybe some confirmation. Obviously, they've been working on this a while, so some confirmation that Ryan Cohen and company think this is something, right, that may have some considerable upside effects on our price action. So when are we going to see that, though? When is that actually going to materialize? We'll spend some time talking about that today. I'll say, bite-sized takeaway. I expect we're going to start to see some upward movement surrounding the expiry of another set of swaps, right? But this time, Chewy swaps. I'll talk about why I think that's the case and what I'm going to be looking at in the context of that information to try to get a little bit more insight on what's going on. So, so let's take a look at this today. Before we do, we got to express our gratitude. Once again, enjoying a cup of coffee today. I'm just going to keep doing this so long as I keep having the coffee, and it's delicious and very strong. Great caffeine content. Very good. And this is Fervent Coffee by Keith and Tabitha, who sent me some of their small batch roasted coffee from Colorado not too long ago, which I'm still enjoying. Thank you very much, Keith and Tabitha. So go check them out. There's a link down in the description of this video. And then today's newsletter is brought to you by Kurt Lusko, aka Short Fridays, as well as this video breakdown, as well as our monthly sponsors, Dat Scruffdo, Ken Wedmerlin, and Not Medical Advice. Thank you very much, everyone, for helping offset some of my data expenses here. It goes a long way. So let's hop into this today. So thinking about what might be coming up here, right? So earnings announcement, great. Convertible bond announcement, fantastic. Understanding how this is evolving, right? That I should say unfolding has been our task over the past few days. And now that we get the closure of the offering, GameStop has got that full $1.4 billion now on its books. This implies a net asset value floor based on the price to book value 2.0 valuation we've seen over the past year. It's something around $25. So now we're in this state where GameStop is, based on this previous calculation, undervalued, right? So when are we going to see that start to price up? When are we going to see that take effect? And one question that I got, which was a great question, I forget exactly who asked this, but a great question is, when are we going to see that? When's that going to take place? How has that taken place in the past? And I will say that I think the closest correlate is going to be what we saw back in September after earnings. So we'll go take a look at that real quick, and then we'll pop back over here and take a look at what I think that inciting event might be. So we'll talk about this. So let's go ahead and take a look at our charts. We love our charts. All right, let's pop down to daily chart here. Okay, so first off, what are we looking at? When is GameStop? When are we going to see this kind of price up? Didn't you say this announcement, et cetera, et cetera, et cetera? Yeah, right. And we did see a little bit of a reaction to that yesterday. Maybe we see some more of that unfold today, but what's going on, right? And this is always a question, right? Price is always a question of who stands to benefit from the price staying at this position or moving off of this position. So one thing that we've seen is there is at least one party that is, as things stand currently, it is in the best interest of that party for our price essentially to remain more or less where we are, maybe a little bit higher, around $23 or 20, but still probably below 23. And that is the options market maker, right? So we've talked about this in the past. The options market maker you can judge where their optimal profitability based on that particular week's options expiry is going to be based on a good ballpark metric is what's called maximum pain or the max pain strike. So this is based on options open interest. It's not perfect, right? It doesn't give you directionality. It doesn't give you, how exactly the market maker is balancing, the options market maker is balancing the book. But in general, we can have some broad assumptions that more or less stand true. One of them is that the market maker is going to juggle around the positions such that they are net short options and hedging those short options with long and short shares. So when they have negative options gamma and negative options delta on their books, they're going to be hedging that with long shares of the underlying. And when they have positive delta and positive gamma on their books, they're going to options gamma, I should say, they're going to be hedging that with short shares. So that's more or less how they keep it. And in doing so, they profit off of all of the excess premium in terms of theta, in terms of volatility and the like, off of those contracts, as well as the fees. Well, usually it's the brokerage that gets the fees. They may get some fees. They may get kickbacks from the brokerage. I'm not sure. That's a good question. But they're usually targeting factors that are involved in extrinsic value. So they're remaining gamma and delta neutral, and they're making money off of excess extrinsic value from things like theta and vega, right? So implied volatility. So they're making money off of that. And as you'll see, this often results in the vast majority of options contracts. You will see this. This is always the case. On GameStop, the kind of magic number is around 90% of calls every week will expire out of the money. Puts, because puts are much lower, it's around 60%, I think is generally is what you generally see. So the options market maker right now is incentivized to have the price finish the week around $23. And the way that our options chain is stacked, we've talked about this a bit, if the price is allowed to move up too much, we have some pretty big call positions around $23, $23.50 and $24 that will impact that bottom line, right? So not enough puts will move into the money or move out of the money for those calls moving into the money. So they're not going to make as much. So they're actually incentivized to structure their hedging or to intervene in the movement of the price in allowable ways that will ensure that the price will end up at around $23. And other options traders will take this into account and will move options around accordingly as well. There's another group of traders who have just entered this. I mean, they've been around, but now they're here in large number. And that is convexity traders. So these are gamma traders. These are traders who are looking not only to make money off of options contracts that benefit from implied volatility or from theta decay, but also look to be exposed to long gamma. So these are traders, right, who are going to, they're long these bonds, right? So these are more sophisticated traders. They're going to be long these bonds with their embedded call option. They're going to look to profit off of the changes in volatility of this contract, of these bonds, and they're also going to be short the underlying stock. So the result is that within a given range, right, ballpark this at about the middle of our price range here, these traders are going to have their maximum profitability toward the ends of this price range. So 20, 21, 22 is going to be profitable for them. 27, 28, 29 is going to be profitable for them. 24, 25, 26, not so much, right? So convexity trades, right? I'm not an expert in this, but as I understand the way this goes, right? The middle of a convexity trade, well, obviously you want volatility to be higher. And the higher you have volatility, right? Actually, the narrower, let's say the greater the convexity of your profitability curve will be. If volatility gets too low, then that's going to get too flat and it's not going to be attractive to try to target gamma. So IV is up right now. It is going down slightly. But basically what that means is around this level, they're probably still profitable. But as we get too close to maybe 25, the 24 to 26 range, that profitability is probably compromised to a certain extent. So they're probably adjusting their positions as well to remain profitable or to, I guess, angle in the price somehow, depending on how big they are. I don't know to what extent they can actually have an effect on the price, but this is in the mix. So, okay. Now that group is a little different too, because it means that once our price goes back up to the other side and we get a little bit closer to that $30 call wall, well, then they're profitable again. But we're likely going to need some kind of large catalyst. Somebody has to come in with a decent amount of buying volume to push us over that threshold, and then hedging is going to take us up into that upper bracket again, and we'll probably hang out around that 27 to 30 range, unless we have again something so big that it really blows the roof off that thing. But something like that. Okay, so what does this have to do with what we're seeing, and what does this have to do with, let's say, previous at the market offerings that occurred in GameStop? Well, as I mentioned, September 20th is the one that I'm seeing here to be the most likely, right, to be the most pertinent to what we are looking at here. And why is that the case? Because we had an offering where we had new equity introduced into the company, and we had a test of that NAV floor. So if we zoom in a bit here, right, so what happened the weeks prior to earnings? Well, we had 2 weeks of pretty strong volatility, upward volatility in GameStop going into this. So we had a big move starting on, let's see, this would have been Thursday the 29th, started to move up. Then we moved down the following week after we got pretty close to 25, came back down, and then moved back up. We got a Roaring Kitty tweet saying that this was him dropping Woody, so saying that he was probably done playing with Chewy. This may have had something to do with Chewy swaps, right? So the idea that there may have been some Chewy swaps that were closed there, but it seems also to have been a reference to him exiting his 9 million share Chewy position sometime in here. Now, what happened after earnings, right? So this was a couple days after he had his tweet. He tweeted on Friday, September 6th. Earnings was on Tuesday, September 10th. We traded down during this day into the mid-23s, but then we got an announcement from the company that there would be a 20 million share offering. Overnight, the stock dropped down. Where did it go? Right to that 2x notional asset value floor, that 2 times price to book ratio. That seems to have been a lower bound, a highly respected lower bound in our trading. The only time that we had basically moved through that had been the Nikkei crash, where we stayed below that threshold for about a few minutes, right? Maybe the course of about an hour, we were trading back over that threshold. So, okay, so we traded down. We hung out in the sort of lower 20s, lower 19s. But by the time we got to the end of the week, right, we definitely had some shorting keeping us down there, really grinding out options. We had some interesting options purchases. I remember in my write-ups here come in Wednesday, Thursday, and then Friday, huge move to the upside, 62 million volume. And what did we get from the company? An announcement that the offering had been completed. So something here, right? This was possibly related to that news. But possibly the offering was completed as a result of, it was connected to this, not like, oh, it's completed, okay, have the price trade up. But it's possible that through here, right, what was the purpose of that offering? It was kind of a small offering, right? Just 20 million shares. Why do this? We weren't exactly trading at a premium. We were trading, much lower than these offerings we had earlier here. But I was talking to Richard about this not too long ago, a couple of days ago, when we were thinking about the implications of this net asset value floor and the implications of this recent offering. And the idea here is these offerings may be related to swap exits. So the idea is that what Ryan Cohen is likely doing with these offerings is he's saying, look, okay, the company's going up. We're going to do this. We're going to introduce some volatility. You're going to have other institutions come in here, figure out what you're doing, and they're going to squeeze you out of this position. I don't have to do it, but I'm going to bring them in and do this. So you can either let them squeeze you and blow you up, or you can fork over some cash. It's going to be a loss. You can fork over some cash, but you can have an orderly exit, and then you get to join the game that they're playing and squeeze out whoever is also stuck on the other side of this trade. What what I was talking about with Richard was possibly the idea that what happened here was an offering, that there was some swap here, maybe a Chewy swap that contained some GameStop. And this offering was meant to allow an exit to that particular buyer, right? So this was shorted down. The swap was exited, maybe for a profit, maybe for break even, maybe for a slight loss. It was exited. And then once that was done, right, there were a bunch of fails to deliver that needed to be covered. They were covered all at once, and then up we go, right? Okay. We did not come back to this 2x NAV floor. We didn't come back to the pre-offering 2x NAV floor. We have not done that. GameStop has never gone back, has not yet, certainly, and does not project to come back to that $19.30 floor that we saw after Q2 earnings. The next time that we came back to anywhere close to this was actually just recently, right? So over the past couple days, we've tested that NAV floor over the course of several days. We tested it on the 27th. We tested it just around, we were above it on the 28th, and then we tested it again on Monday. We did dip below it slightly, but maybe for a grand total of 30 minutes did we spend our trading below that actual level. Okay, so what happens now? Well, we know that the convertible bond offering is closed, and its offering period encompassed 2 days in which we had very large outstanding swap positions. So this would have been the 28th and the 31st. So it's possible that these convertible bonds in part were used to allow an exit to certain holders of legacy swaps that made an orderly exit in exchange for giving cash directly to the company rather than being squeezed out by other institutions. Now, okay, what sent us finally off of this floor earlier was this huge buying event, FTD covering, right? We actually don't have GME FTD data. FINRA refuses to hand over this data, to publish this data. It is missing from the 20th to the 23rd. We don't have data on FTDs, and they only resume on the 24th. That just so happened to cover most of this volume and most of this up move. Okay, so we might need something like that. Well, okay, do we have anything like that coming up on the horizon? Well, we do seem to have, interestingly, some Chewy swaps coming up. We have potentially FTDs from this big move down, right? We had a lot of fails on XRT, which is still on ratio. We had a lot of fails over on IWM toward the end of February. XRT is still on ratio, so it has not been able to have been cleared by fails. We do see some liquidity constriction over in GameStop directly. So if we just take a look at our shares available to borrow, yeah, we can still see that there is some restricted liquidity. So earlier in the week here, I think this was on Monday, heading into Monday, we saw as many as 4.2 million shares available to borrow. This was the largest number I had seen pretty much ever in looking at this data every day. Going into November, for example, we only had sort of lower 3 millions. That's basically where we've topped in terms of shares available to borrow on international brokers, which is not all of the true lending pool, but it does give us a snapshot. Right, yesterday we got down to 950,000 overnight, or the previous night, I should say. Last night we got down to 1 million shares, came back up to 2.4, and then now we're back down pre-market here to 1.5, and that's where we're sort of standing at the beginning of today's trading. So, I mean, this is still plenty of liquidity, but it's not as much as, let's say, was enjoyed heading into earnings. This is a big swing in available short liquidity. So maybe something is going on here in terms of needing to account for fails. Certainly may be difficult to account for this kind of musical chairs with ETFs, that Richard certainly talks about all the time. So we have this as a potential catalyst. Maybe there are some of these movements coming in that have to do with FTDs, with closing out FTDs, and maybe there's just purchases on the lit market that have to occur if somebody gets, I don't know, maybe somebody gets margin called or just can't do this musical chairs game anymore. But another one, and this is what I talked about a bit, I posted something about this on X, right? So I've been looking at some swap data. And I had a couple users come in and talk to me here. So this is from Metro Ballin. So I had noticed that there were some Chewy swaps that were coming due, quite a lot of notional value coming due on the 14th of April. So this was pointed out here by Swami Sees that, interestingly, March 27th, 2020 to April 14th, we had this this very interesting pattern. This was around the COVID dip. But maybe this spike here, this V-shaped recovery had something to do with a swap roll or a swap entry or something like that. And does seem to line up very interestingly with what we're, this range of depression that we've seen over the course of a number of years, right? Something like we have this big volume going into the end of March, then we have a dip after the end of March, and then big volume again coming around mid-April. Has occurred in several of the last years. So very interesting to see if possibly that has to do with something swap related. We did have some Chewy swaps actually that were marked with prices that Chewy never hit. Very large volume. That Metro Ballin was good enough to point that those were closed. So October, just before our run in October, someone did go ahead and close those. However, there are other Chewy swaps that expire the very next day. On the 15th, on the 16th, and on the 17th. There is a very high volume, a very high notional value of Chewy swaps. Okay, so we have one here, for example, on the 17th that has 100 million in notional value. So that's going to be something like, how many shares here? That's something like 500,000 shares. Is that right? No, that's 5 million shares. Okay, that's a lot of shares, right? So if we look back at the 920 covering, we saw a pretty big dark pool volume come in for actually something of this size actually on GameStop. Maybe did I label this correctly? I think I may have not labeled this correctly here in terms of the price. It was a dark pool order came in on that Friday, on the 20th of September, for almost 5 million shares. It was 4.6 million shares. It was a $92 million dark pool order came through right before we blew up on the 20th and got that 60-something million volume. So very interesting to see that we have an order coming up. We have an expiry. These were modified. Let's see. The last time these were modified was January 16th. So just after January OPEX. I have to ask Metro Ballin a bit more about this. But very large coming up on the 17th. We've got 26 million. So this is around 1 million shares. This was modified. Ooh, interestingly, the effective date was January 6th, 2021. Yeah, very interesting if that's a short swap. The expiry there is the 16th. So that's also some very big volume, right? So that's at least 1 million shares. Well, that was the notional value then. I don't know if it's higher now, something like that. Again, have to get some more details with Metro Ballin on this. I am not a swap expert, but understanding this seems to have some pretty big implications for deciphering some of these more volatile price movements that we see kind of pop up at random times. And then we've got this one on the 14th, which looks to be different than the one that was closed. That has a notional volume of about 10 million. So right there, basically heading into April OPEX, we've got a lot of notional value in swaps. So what's going on with that? Is that going to be tied to some kind of big movement to the upside? Do we kind of hang out on the low side? Is somebody negotiating an exit from these swaps? Do we see something like this going into April OPEX? Not sure, but that may prove to be the type of catalyst, just as this seems to have been likely the type of catalyst that moved us at the end of September, on September 20th for our end of September run, post at the market offering. We might see something like this as well. So in any case, We're waiting for something like that to emerge. In the meantime, we might not see this, this immediate move up to 25, although we're looking pretty today, moving up on GameStop, right? Let's bump back over to our chart, right? So early trading today, starting to move up. Let's get in nice and tight here. Be like a nice tight chart. There we go. So yeah, moving up. I mean, yeah, I guess there is a chance that we just price up right to 25. As I said, I don't know to what extent convexity traders are interested in that, and I don't know to what extent. Well, certainly not the options dealer, not the options market maker. We could just start going ahead and there we go. We could just start going ahead and moving up to 25 from here, but we might have to wait for maybe this swap related catalyst to unfold over the next couple of weeks, but certainly can take heart in that pretty sound test of the NAV floor earlier this week, at least until we get to this new NAV floor. And we'll probably overshoot it. This is the thing I'm talking about. We'll probably overshoot this before we come back and actually test it, maybe even on the other side of this. Well, at the time of a swap roll, or some future swap roll, or on at the time of another at the market offering, a convertible bond offering, or on the other side of this macro cycle that I think we're moving into, like we talked about yesterday. Okay, so in the meantime, do we have something in our options landscape or in the broader market context that's suggestive of what we're looking at? Well, in terms of broader context here, we talked about the idea of GameStop acquiring some Bitcoin to maybe divorce itself from some of this influence from the movement of the broader equities market. So, for example, if you look at our movement here, right? So you look at this chart. This is SPY yesterday, and if we scroll down to GameStop's daily chart, a very similar archetype, right? Kind of deep spike early, move up to an intraday high, and then trade down off that more slowly into the second half of the day. SPY pretty much looked like that, and then trade up into the end of the day. A little bit less of that, although we did get that after hours kind of for GameStop. So, okay, so SPY clearly showing some decent correlation with GameStop here. It will probably continue to do that. That factor won't change until we get an announcement that GameStop has acquired Bitcoin. And right, here's the thing, they might not. Like I said, it's also very appealing to me for them to just hold this as cash. It certainly makes that floor even more stable. And because we do continue to see broader weakness in equities markets, right? They could use this to go purchase some distressed assets. Is Bitcoin necessarily a distressed asset? No, right? I mean, it's still the price is still kind of up there. It's not showing crazy weakness. This could be something of a Kansas City shuffle. Maybe they'll go acquire Bitcoin, but maybe they'll just dangle these as keys and then acquire something else totally out of left field that nobody has had their sights set on. So this definitely gets a lot of market analysts hyper fixated on the relationship of GameStop to Bitcoin or to MicroStrategy. Of course, right now that GameStop is interested in this MicroStrategy strategy. We get this hit piece, right, saying, "Oh, it's now all of a sudden there are analysts who are bears, right? It's like universally bullish on MicroStrategy, and then as soon as GameStop is doing their strategy, one analyst is just like, "Oh, actually, now I think MicroStrategy is a piece of shit." So, maybe this is something of a diversion in the meantime. So we're not going to have that correlation, I think, with Bitcoin until it's actually demonstrated that GameStop has acquired it. So we'll continue to look to some correlation with the broader equities market. And as we look forward, we do have some bearishness. So as long as we stay above basically what I'm seeing here, right, lots of volatility, we still see, just everything blood red, long puts predominate basically our entire landscape, which means lots of volatility, bigger intraday swings. The real meaningful strike here is going to be 550. It's still 550. If we breach 550, we're probably going to see a bigger rundown heading into April OPEX. As long as we stay above this, right, traders will probably swing us back toward 560 and then bring us back and then bring us up and then bring us down and then bring us up and bring us down, right? We'll kind of dance around in here is the idea. Why? Because you can profit off of this volatility very well, which is appealing to a number of different traders. But if this put wall fails, if this 550 put wall fails, that's going to signal some deeper downward volatility, right? We can move down below it and then move up. Maybe traders reposition a bit down here, down at these lower strikes, and then we'll have our definitive move down into the 540s and the 530s, which again, in terms of our deeper momentum structure, does look to be the case. Though, if we stay above this long enough, we could get some kind of rally in sort of later April or May. But yeah, right. April OPEX bearish, continues to be so. Puts continue to pile up around April OPEX. Reflecting uncertainty. So possibly this is related to tariffs, or possibly this is related to more technical factors. The idea that we do have this unwinding of equities positions across the broader market, and whether certain events, supposedly tariffs, potentially tariffs, or potentially what's coming up with bank interest rates may cause further equities unwinding. But of course, tariffs are a nice veneer for that. Although, it's not that they're unrelated, but that's the nice, right, very popular. That's the nice thing at the front that people can focus on to make sense of a narrative. So, that serves as a nice rallying point while people kind of ignore the man behind the curtain that has to do with this maybe carry trade stuff. But so we could see maybe some weakness until we get a catalyst. If we do get that breach, that might bring GME down a little bit. If that occurs before we get something like a Project Rocket catalyst or something like that, if it's something swap related. In terms of OI, though, we do see in the short term, so looks like short calls coming off the board and long puts coming off the board below 2250. So this is good. So traders are going to take profits in this lower range. Don't really need to have these positions here. If they're out of the money, I want to get out of this because it does look like probably in the short term we're moving up somewhere. And we did have a very interesting trade here at 30. Big block trade over 6,000 calls long yesterday. Came in at the ask. For a total expansion on the day of OI of over 8,000, right? Huge ask volume at the strike yesterday. So somebody here is betting in the short term that we're going to see a volatility spike because very low likelihood those go in the money. So somebody's betting on a volatility spike or, a dynamic enough move that those are going to be profitable. Probably would have to move in a day like today to like 25. If those move to like 25 today, maybe there's a little bit of a move in that. Let me take a look at how they're priced. They're probably down. They were down at the end of the day yesterday. Yeah, dog, they're down. Those are down almost 50% from where this guy bought them. And this person has not exited this trade yet, to my knowledge. Have not seen anything like that pop up on the options chain. If we hop over here, any big blocks? Some bid volume off the open, but not the whole trade. Not enough volume at the bid yet. So that guy's still in that trade. I mean, good luck, dude. But you can understand, right? This is how quickly, if this doesn't do what you want it to do when you try to make short single leg long options bets, it can go like and do not what you want it to do, like really fast. So these are now worth 4 cents. That guy picked him up yesterday midday at 8 cents. Now he's down 25K just like that. So keep that in mind. All right, always good to keep in mind when I talk about these or when I call these out. They're interesting, but it doesn't necessarily mean, hey, you should go chase this. Definitely not saying that. So yeah, let's go ahead and take a look back here. Let's look at our GEX a little bit. Our gamma exposure. Yeah, max pain still 23 for this week. 24 for April OPEX, so a little bit higher. Definitely good to see that. Yeah, I mean, we do have this kind of big composite position here. If we don't, probably why we're bouncing between 2250 is the fact that there's a lot of this kind of composite layer. We need some volume to kind of get us in there. Once we're in there, we'll probably stay stuck in that range, in that 23 to 2450 area. But we do need some sort of commitment to get us into there, I think, to trade intraday based on how COGX dominant positions work. They are volatility suppressant when approached and when you're trading between them. So before yesterday, right, we had a bit of a smoother ramp, which we saw exploited, but now we've got kind of a 2250 gully and a 2450 gully. So this kind of projects more trading in either of these grooves. 2450 is not appealing to the options market maker, so maybe be preferable for the options market maker to see us trade definitely closer to 23. If we do get a big external buy pressure, right, then there is a lot of call gamma here. There is a lot of gamma hedging that will supply some additional buy volume to that. So we would move pretty hard to the upside if we do get something like that in the short term. IV, right, while we kind of hang out in this 2250 to 23-ish area, that's a pretty narrow range. IV is still going to tick down. That is going to hurt trader convexity a little bit the more it goes down, but it is still pretty elevated versus what we were seeing prior to earnings. So they're probably not hurting from that just yet. If it gets too low, right, then, and we don't have some sort of a catalyst, although I don't see this happening, definitely not this week. I don't expect IV will really kind of lever down this quickly. Then that might be conducive to trading at lower ranges. But given what's happened to our NAV floor and what we have coming up potentially with these swap expiries heading into April OPEX, that seems less likely to me based on what I understand of our current landscape. So, but important to keep in mind there. So that's what we're looking at. Let's go and do a quick sum up. So looking forward, trying to investigate and understand what's going on with these swaps. I'm definitely feeling very good about us holding the NAV floor earlier in the week here. So that's definitely a good sign as to downside support there. Do we move up above or to 25 prior to that? I think we do have a chance to move to 25. It will depend in part, I think, on market stability and whether I don't think we're due for any kind of FTD covering event this week, but it may require some other kind of catalyst. So something potentially swap exit related, the shedding of a swap hedge, right? That can bring in some external buy volume, but likely something of that magnitude is required. And we do have some solid potential for that coming up in mid-April. And of course, if you love your tinfoil, then you'll know that the 109,420 number by Roaring Kitty in his Time U cover post does suggest something of the like. 420 as being a key date for something like that. So this swap expiry, if it does play out, does suggest something like that, potentially potential upside into or coming out of those swaps would be targeted. Yeah, let's see what that be. Yeah, 420 is that Monday. 420 is that Monday. So very interesting. So yeah, looking at continued stable trading here. We're in a call gamma supported area. As long as SPY staying above 550, we're probably looking okay there. Nothing too egregious to the downside. Yeah, and just waiting on this price up to actually play out. Looking to figure out more details. Hey, do we have? Is there a secret buyer of some of these bonds? That's another thing dangled in the background. Some speculation there potentially about Sultan Al-Madid. Not sure. It could be somebody else, or it could just be major institutions that are now going to be made to fight against one another going into this macro upcycle, which is only just starting to play out. So it'll be interesting to see how that will play out throughout the rest of this week into the middle of April, and then of course throughout the next couple of months. So definitely looking up. Very great things for the company. Very great things as well. It looks for price action. So that's my standpoint there. Obviously, right. Not an expert, but I'm Yeah, I think I've laid out my reasons why I am particularly optimistic on where we stand at this time. So thank you very much, as always, for watching and listening. We'll catch you guys tomorrow at our next open interest newsletter video breakdown. Thanks very much.